Now that we've computed the adjusted balance of all of the T accounts for the accounts that were affected by our adjusting entries, we're ready to make our adjusted trial balance down here. Some of these accounts that weren't affected during the period by our adjusting entries already have their balance stated. Obviously, they would have their own T accounts. I just did this for the sake of simplicity. What we need to do is take this information that's provided to us right now, add to it all of the balances of the accounts that we use in our adjustments, and make sure that we have debit credit equality, that our debits equal our credits after we made our adjustments. So what I can do is in each cell where I want to list a number, I can just click on where it wants to go and hit equals. Accounts receivable is going to want to be a debit because it has a debit balance. We can go up. We can find our accounts receivable balance, which was $6,000. I'm going to click on it and I'm going to hit enter to copy it down to our adjusted trial balance. For our allowance for bad debt, that is going to have a credit balance because contra asset accounts have a credit balance. So I'm going to go to the credit side. I'm going to hit equals. I'm going to scroll back up again. I'm going to find the balance to our allowance for bad debt, which is 180 on the credit side. I'm going to click it. I'm going to hit enter and bring that down to our adjusted trial balance. Next up, we have supplies. Supplies will have a debit balance like all assets do. I'm going to hit equals. I'm going to go up. I'm going to find our supplies T account. And our supplies T account has a current debit balance of $5,100. I'm going to grab that number. I'm going to bring it down so that it is on our adjusted trial balance. We have prepaid insurance, also an asset, also a debit balance. Hit equals. Go up. Find our prepaid insurance, which has a debit balance of $3,600. I'm going to bring that number down. Scroll down a little bit so we can see more of our adjusted trial balance. We have our balance for equipment, but we need our balance for accumulated depreciation on that equipment, which as a contra asset, just like our allowance for bad debt above, will have a credit balance. So I hit equals. I go up. And I find that our accumulated depreciation of equipment account has a $300 credit balance. I click on it, I hit enter to bring that down into our adjusted trial balance. We were provided with accounts payable, but we need our balance for salaries payable. So I'm going to hit equals. It will have a credit balance because it ends in payable. It's a liability. I'm going to scroll back up and find the balance of our salaries and wages payable account, which I see right here is a $660 credit balance. Click on that. Hit enter, bring it down into our adjusted trial balance. We have interest payable next. We'll also have a credit balance as a liability. I scroll up and I see that that account has a balance of 100 right here. We have a credit balance of 100 for interest payable. I click it, I hit enter, bring it down here. Unearned revenue. What is our current balance of unearned revenue? We just found that a minute ago too. It has a $2,800 credit balance. I'm going to bring that number down to our adjusted trial balance, $2,800. We were provided with notes payable and common stock and retained earnings and cash dividends. I still got some more accounts I got to fill in. The first one that's left blank in here that I got to bring in is service revenue. Service revenue, like all revenue accounts, should have a credit balance. So I'm going to hit equals. I'm going to go up. I'm going to find my service revenue account, which has a balance of $16,000 on the credit side. I see it right here. So let's bring that down into our adjusted trial balance with a $16,000 credit balance. And then I got a whole mountain of expenses. And expenses, all of them will have a normal debit balance. So we put them on the debit side. I'm going to start with insurance expense. Hit equals, go up and find our balance for insurance expense, which was $1,200. Next up, we have supplies expense. I'm going to go grab that, hit equals, scroll up till I find it. That balance is $2,900 for that account. We have depreciation expense up next. I'm going to equals. I'm going to go up and find that account. That account has a balance of $300. Click on that, bring it on down. Interest expense. If I scroll up, has a balance of $100 right there. I'm going to bring that number on down. Next up, we have salaries and wages expense. Hit equals. Go up and find that amount, which was $660. Click on that. Hit enter to bring it down. And lastly, we have our bad debt expense. Going to have a debit balance because it's an expense account. Hit equals. Go up. Find our current balance, which was $70. Bring that on down. And now we have everything filled in. And this is the point where we hope that our debits equal our credits. So to add up the entire column, I can say that it is equal to the sum, open a parenthesis, of all of these numbers. I'm going to highlight every single thing that we have in the debit column and figure out that the debits on our books total up to $50,000. What about the credits? Same formula. It's equal to the sum, open a parenthesis, and highlight all of your credit accounts, close the parenthesis, hit enter, and pray that this also says 50,000 because that's what we're looking for, is debit credit equality. And thank heavens we have it. So now that our adjusted trial balance balances out, we're ready to prepare our financials. The first financial that we're going to prepare is our income statement. Income statements, we're going to do a very easy single step, just our revenues minus our expenses. So what is the balance of our service revenue account? Well, let's click right over here and put it in the rightmost column. And we can just take that number directly from our adjusted trial balance. So this is going to be equal to the $16,000 that we are reporting on our adjusted trial balance for service revenue. What about our expenses? Well, for insurance expense, I can hit equals. I can go back to our adjusted trial balance and see that we have a $1,200 insurance expense. Underneath this, we also have supplies expense of $2,900, depreciation expense of $300, interest expense of $100, so on and so forth for all the different expenses that we have. We have that listed here. Excel has this fancy little feature called the fill handle. If you go to the bottom right corner and find that little square, it's going to change your cursor to a black cross. And if you scroll down to all of the different things that you want to fill in, you transfer all of the numbers. Those are all of the same numbers that we had listed over here. So I don't have to click each one individually. Unfortunately, it does click formatting sometimes. And I don't want dollar signs in front of all of these, so I can go up into this number section on the top, click the comma, and it gets rid of the dollar sign. However, it brought in decimals. So if I want to get rid of those, that's what these two guys are for over here. If I hit the decrease decimal button twice, it gets rid of those. And then lastly, for good formatting, I do want a line underneath income tax expense. So if it erases yours when you fill handle, just go up here to the border thing. Mine's already set to bottom border, but you would click it right up here and brought my bottom border in. So what are our total expenses? Well, it's equal to the sum of all the numbers that we had right here. Our total expenses for the period are $7,600. And we know that our revenues minus our expenses equal our income. So for Meriwether Card Detailing, during the first quarter of the year, they made $8,400 in income. And we're going to need that amount for our statement of retained earnings. For our statement of retained earnings, we start with our beginning balance of retained earnings, which I see on our adjusted trial balance was zero. We had nothing. But we added to it during the period because we were profitable in our operations. We made income of $8,400. So just bring down your answer to your income statement, if you will. And then we have our little no-name subtotal, which is your beginning retained earnings plus your net income. And that no-name subtotal tells you how much you could have retained had you not taken any money out of your business and given it to your owners in the form, for us, of cash dividends. But we did. We had some cash dividends that we paid, which is going to decrease our retained earnings. I'm going to want this number to be reported negative. So I'm going to equals minus, to make the number negative, I'm going to go back to my adjusted trial balance and see that according to our information, we paid $1,400 worth of cash dividends during the period. I hit enter to bring that number on over, and now we've got a $1,400 subtraction to our retained earnings. So if I add together our no-name subtotal of $8,400 plus the $1,400 that we withdrew from the business, it means we held on to the other $7,000 of our net income. Our retained earnings is $7,000 for the quarter, which is going to bring us down to our last financial statement, which is the balance sheet. We have a two-column approach for this particular example. So what we're going to do is in the rightmost column, if there's not another account tied to the account, we just put the balance in the rightmost column. And cash is one of those. We don't have anything tied to our cash account. So in column C here, I'm going to equals, and I'm going to go and I'm going to find our balance of cash off of our adjusted trial balance, which was $19,500. If an account does have another account tied to it, you should put the balance of both of those accounts into your left-hand side, and the net or book value goes into the right-hand side. And accounts receivable is one of those. We have a balance of $6,000 for accounts receivable, but we expect that some of that is going to be bad debt. So I'm going to hit equals and negative because I want this number to be reported negative, and click on that 180 and bring it over. And what we're saying here is that yes, we have $6,000 for the receivables, but we don't think we're going to ever see $180 of those. Well, if I add together our $6,000 in receivables and our negative $180 display, if you will, for allowance for bad debt, I get a difference of $5,820. That is the portion of our accounts receivable which we reasonably expect to collect and convert to cash in the future. Supplies does not have an account tied to it, so I'm going to put it right in the rightmost column. And according to our adjusted trial balance, after we did all that stuff, we have $5,100 of supplies on hand. Prepaid insurance does not have an account tied to it, so I'm going to put that right in the rightmost column. And according to our adjusted trial balance, that is $3,600 of the prepaid insurance that we have on our books at period's end. And then we have equipment and accumulated depreciation of equipment. There's an account tied to our equipment account, so let's put that in the leftmost column. Equals, back to our adjusted trial balance, we see that our equipment has a balance at this time of $6,800. However, that equipment has lost some value, so we're going to subtract out the amount that it's depreciated to find its book value. And since I'm subtracting it out, I want to hit equals, negative, go back to our adjusted trial balance, and come up with that $300 balance we have for accumulated depreciation of equipment. And now if I go and I add together the $6,800 historical cost plus the $300 negative display of what we've lost, our financial statement is going to tell people that the fair value of our equipment, should we resell it at this point in time, is $6,500. Yes, we paid $6,800 for it originally, but it has lost $300 in value. And that is all of our assets, so we can find the balance of our total assets by taking the sum of all the numbers in the right-hand column. And that comes out to $40,520. One side of the balance sheet done. Moving on to the other side of the balance sheet. Liabilities are the same way. If there's not an account tied to it, you just report it in the right-hand column. And fortunately for us, we don't have any contra or adjunct liability accounts, so we don't have to mess with anything. We can put all these numbers in the rightmost column. Let's go back to our adjusted trial balance. I'm going to equals for AP over there, and we see we have a $360 balance of accounts payable, $660 for salaries and wages payable, $100 for interest payable, $2,800 for earned revenue, and we have a $10,000 notes payable. I'm bringing over accounts payable right now, so I'm just going to click on $3,360. But since I have all of my accounts listed here in the same exact order that I have on my adjusted trial balance, very carefully made sure I did that beforehand so everything would line up. I don't have to go nuts, hit equals and bring it over. I can just click the fill handle, drag it down, and it copies all of those numbers over for me, even the $10,000 amount of notes payable that I almost forgot. Again, I don't want all of those dollar signs, so I'm going to go up here. I'm going to click comma style, reduce my decimal by 2 points to get rid of that. And we have all of our liabilities listed. If I add them up, that is equal to the sum of those 5 numbers, which Excel is going to calculate for me and tell me it is $16,920. Our balance sheet isn't that assets equal liabilities, it's assets equal liabilities plus equity. So let's figure out our equity. We have 2 accounts in here: common stock, the amount that people paid in and increased the value of our business, and retained earnings, the amount of money we made internally that increased the value of our business. So what was common stock? Well, I hit equals, I go back to my adjusted trial balance. Our balance of common stock is $16,600. What about retained earnings? Well, according to our adjusted trial balance, it was 0, but that's not the number that we want because that's not the current amount of earnings that we are retaining. In fact, we just figured out the current amount of earnings that we are retaining on our statement of retained earnings. It was $7,000. So All of the numbers on a balance sheet come from your adjusted trial balance, except for one exception. Your balance of retained earnings should be the current balance that you have on your statement of retained earnings. And our total stockholders' equity is equal to the value of our common stock plus the amount of money we're retaining. It is $23,600. So now we figure out if our accounting equation works. If our assets are equal to our liabilities plus equity. So liabilities in total were $16,920. Our equity in total was $23,600. And when we add those two numbers together, we come up with $40,520. Our balance sheet balances. It means that we have this information which you can display to anybody who wants to use our information. We can record a record of this, and we can move on to the last step in our accounting process, which is to close all of our temporary accounts.